Yahoo coming out any moment, but let's get to today's action. We have Stephen Rosen. He's Hightower Partner and Managing Director. He is calling for a pullback, and Larry Shover is in the pits of the CME. We got Larry Shover's notes at 8:30 this morning, a half hour, 45 minutes, an hour before the market even opened. And Larry, let's go to you first. One thing that I thought would weigh a little more heavily on the market than it has are the comments of Kansas City Fed President Esther George. She wants to taper. Everybody's talking about when they're going to taper. She wants to begin tapering of bond purchases right now. Here's what she told Peter Barnes about it. I want your reaction.
I think it is time to begin to adjust those purchases. The labor market has shown now for the last 6 months a pretty steady gains of close to 200,000 per month. That is a good indicator that there has been sustained improvement here.
Now, she, of course, is in the minority as a hawk, but what is the market telling you about where the momentum is on the Fed, whether they're moving towards her or away from her?
Well, right now there's a big disconnect because people say on one hand you have the big hawks like Ms. George who want to start tapering sooner than later. On the other hand, how do you put your head around the fact that we might have a zero-handle GDP figure coming up? Everybody's revising downward their GDP figures. So how in the world is the Fed going to treat this disconnect? Because GDP, jobs, what's going on here is making people continue to be on the sidelines right now. That's why everybody's asleep behind me. That's why we haven't had much volume yesterday either. People just don't know what to do with all this.
Okay, but then you wonder, Larry, if the dollar is weaker today on the belief that, for example, the Federal Reserve will continue its bond buying program and do the opposite of what Esther George told Peter Barnes she thinks should happen, why not just short the dollar a little bit? I mean, there's still ways to make money.
There is ways to make money, but I think on the macro scale, you have to be long dollar, especially against European currencies. I mean, I think today we saw the snapback with regards to the European currencies because of the retail sales yesterday and also our industrial production numbers that came out today. Short-term thing. I mean, right now it's a little bit more confusing. We're in a very tight range with the dollar. Long-term, I still believe that the dollar is going to rally 10 to 15% next 6 to 9 months, especially against the euro currency.
All right. Well, Stephen, there are a lot of fixed income people out there. Not everybody's getting into the stock market, particularly at these lofty levels. You say avoid treasuries, but don't avoid fixed income entirely. Where do you go if you don't go to treasuries?
Well, I think what we've seen over the past couple of months and even the last year are safe havens, such as multi-sector, mutual funds, floating rate, high yield. I know the returns over the last month or two have not been too spectacular over there, but I think everyone has to remember that bond returns are mostly made up of dividends, and it takes about a year for those dividends to come into play. So, yes, we've seen some negative performance over the course of the last 8 or 10 weeks, but when you extrapolate that over the last year, the returns still have been exceptionally strong.
Okay, that is true. So what do you do with your money if you've got a chunk of it that you'd like to commit to the markets at the moment? Where would you salt it?
Well, I think you can start looking at some of those areas. We've seen a huge move in the 10-year Treasury, which has clearly had an effect on bonds. The 10-year Treasury has moved from about 1.6 to almost 2.6 in the past 10 weeks, and we've seen some negative returns. But I think now you can start to move back into high yield, floating rate, and the multi-sector funds, and even possibly look around global bonds as well.
Okay. By the way, we are getting some Yahoo numbers coming in right now. We're seeing some aftermarket activity. We're going through those numbers right now. Larry Shover, what are you looking for on Yahoo right now?
Right now, I think the options market's implying a slight beat right now. The implied volatility is actually a little bit less than typical historically. Right now, skew is running about 65%. That means people are not scared of the downside, looking for a beat above 30 cents.
Okay, and let's look at the stock price reaction here. And if we put it up on the screen, you will see it's not a huge move at the very moment, but all of this as the markets digest the numbers that come out. I am seeing Yahoo, let's see, the bids, 26.84, barely below the last trade of 26.88. The ask, though, 26.93, that's above. But as we look at these numbers, here they are, 35 cents versus estimate of 30. David?
Okay, we're getting the numbers.
Wow.
Go ahead, producer. Joe Ling, go ahead. What are the numbers?
That's right. We have a pretty big beat here, 35 cents per share against the estimated 30 cents a share. And the revenue is $1.14 billion, beating that $1.08 billion that we were expecting. So that's the numbers that we have right now. That number, of course, is ex-TAC. We're going to dig into it more for you and try and find some more information. So I'll send it back to you.
A lot of movement after hours. One would expect with a beat like this, particularly as we've seen these lofty figures coming up after earnings reports that are this positive. Larry Shover, usually his stock really jumps big time. It's not happening to Yahoo right now. Why not?
So I think so, because you buy the rumor, sell the fact. I think the whisper number was about 35 cents. There was so much positive expectation on that, so people are going to sell. I mean, long term, I love Marissa Mayer. She's doing a great job for a lot of good reasons that I'd love to talk about. I would buy the stock, especially on some type of weakness that we're seeing right now.
Well, it already has gone up, and we have to say that the Yahoo numbers, they look good, but do they really represent a 74 increase in the price and the value of the stock over the past year, Larry?
Well, from last year it does, because she inherited a boatload of cash. But let's keep in mind that boat was taking on water, listing to port. She got rid of a lot of dead wood. She focused on mobile services, something that's so darn important. She reinvented the website that was 4 years overdue. I mean, all these things. I mean, it's true.
Okay, let me jump in. Let me give you some data here from the report, Larry, and you can decide.
Sure.
Price per click, the quarterly price per click. That means, of course, is heavy on what matters here, decreased approximately 8% compared to the year-over-year quarter. So you look at that, quarterly paid clicks increased 21% compared to the year-ago quarter of the same one. So you've got converse movements here.
You absolutely do, and I think this is a time when you look at the big picture. I mean, look at the fact that she's taken over, acquired 17 companies in a very strategic way. I mean, Tumblr was the biggest one, but a lot of smaller ones for the mobile services sector. They knew that their ad revenue would perhaps be down, and they do have a lot of weight put on Asian asset monetization. That's going to be trouble, but I think long-term, Marissa Mayer is the bomb. She knows exactly what she's doing. She got rid of the dead wood, and she knows what she's doing. I would buy the stock.
Well, one thing they have done, while they have bought a lot of interesting companies like the Tumblr purchase, and Tumblr is going to be key in their earnings report. They mentioned Tumblr. That's going to be a key part of it. She has also reduced, Larry, from 75, the number of mobile apps, down to 15. So she is buying some really choice products like Tumblr and like the video app Quickie, but she's reducing the overall number so she has a core product that she can deal with.
Yeah, absolutely. I mean, she's trying to streamline things. I mean, she's done that weather app for Apple. She's done a brand new Flickr app. I mean, trying to streamline things, not making it so messy. And that goes true for the website as well. It's cleaned up. It's 4 years overdue. I mean, I think this is in the beginning stages, like a gestation period. It takes a long time to come to fruition. And yes, the stock is up 70%. It's up 70% partly because of Marissa, but largely because of Alibaba. But going forward, I mean, the foundation is set.
By the way, we should mention what Alibaba's the Chinese product. They're expecting it to put out an IPO very shortly. That is expected to bring in a lot of money. And I wonder how much investors are hoping on that cash hoard to come in from the IPO, Larry.
Well, I hope a lot. And I mean, I take my hat off to her. I mean, I think, correct me if I'm wrong, I think they still own 23% of it. I mean, I think most people would have sold all of that stock given the meteoric rise it's had over the past year. She was smart enough to make acquisitions with that cash and still hold on to 23%. She knows a winner when she sees it, and I would bet a lot on Yahoo and Marissa Mayer.
Okay, let's just make one thing clear here. The stock is now trading above $27 for both the bid and the ask. However, the second quarter price per ad falling about 12%. You'll read about that in a headline tomorrow or two, I'm sure.
All right, Stephen Rosen, I'm sorry we had to shortcut your suggestions, but again, we had this breaking news on Yahoo. We appreciate you coming, Larry. We're going to check back in with you in a couple of minutes when the S&P futures close. We are right on time. The S&P futures are closing right now. Let's head right back to Larry Shover at the CME. What do you see forecast from there for tomorrow?
I think more people are on hold than ever before. People are scratching their head. The big question is, why have we ripped up almost 7% since June 24th? If you recall, the S&P 500 was at 1560. What has changed between then and now to make the market rally almost 7%? People are really worried. They need a new narrative. And now we have a 2-day Fed meeting. Who knows what's going to happen with the disconnect between GDP and growth and tapering? Who knows what? So right now, it's a holiday mode. People are a little concerned, but definitely on the sidelines, waiting for the next narrative to come to fruition in the market.
Larry Shover at the CME. Larry, good to see you. Thank you very much.
Thank you.
Thank you.